Thank you for staying tuned to this course. In this segment of this course, I'm going to be discussing the various types of candlestick pattern we are going to be making use of. Now, there are so many candlestick patterns: doji, dragonfly, evening star, morning star, and so on and so forth. But in the course of this video, we are going to be discussing only 3 major candlestick patterns, and these are the candlestick patterns I apply personally, and so that is what I'm going to be discussing in this course. And the major candlestick patterns that I apply are the pin bar, the engulfing bar, the inside bar. These are the 3 major candlestick patterns that I make use of. Now, these patterns are very, very reliable. These candlestick bars are very reliable. If you follow the rules and regulations governing these candlestick patterns, you will always be on the right side of the market, coupled with the fact that you apply it in the special strategy that I'm going to be discussing about in our next video. You are going to be very, very happy. Now, let us proceed to discuss the individual types of candlestick. The first one is the pin bar. The pin bar, we have the bullish pin bar and we have the bearish pin bar, and we have different shades of pin bar. These are the various shades of pin bar. You know, you've seen an hammer before. An hammer has a long handle as well as a head. The head is small compared to the handle, and that is what I'm trying to illustrate here. Now, this is what we call a hammer or a pin bar. This is what we call a pin bar. People call this one dragonfly, evening star, or thereabout, but I choose to classify it as pin bar, to group it as pin bar, to reduce ambiguity. Now, this are the various shades of pin bar that I make use of, to trade, and these pin bars are very, very effective. The pin bar trade setup is one of the most effective price action trade setup there is. It is an extremely powerful setup when used correctly. Many traders only trade off a pin bar formation, and they are very successful traders. In this lesson, you will learn what a pin bar is and how to trade it. Now, the next candlestick pattern that we'll be discussing about is the engulfing bar. This is the engulfing bar. Engulfing bar can be classified as a bar whereby the candle completely eclipsed the previous candle. This is for example, in the forex market, for example, this could be the recent bar, while this is the previous bar. So this bar has completely engulfed this bar, so it is called an engulfing bar. You can see that the high of this candle is higher than the high of this candle, while the low is lower than the low of this candle. Take note, this thread here represents the high, while this here represents the low, while this body represents the open and the close. Now, the open and the close. Now, for example, now if you can look at now, the high of this candle is higher than the high of this, the low is lower than this. So this is called an engulfing pattern. An engulfing pattern. Now, this engulfing pattern offers a very reliable signal that is easy to spot on any chart. There is nothing better than an effective trade setup that is also extremely easy to spot. It only takes 2 candles to form an engulfing pattern, and they usually stand out. So in the purpose of this course, I will explain everything you need to know about engulfing bar and how to trade it effectively and efficiently. So that is how I'll be going to a real chart and show you how to spot engulfing bars easily. Now, the next bar that we are going to be trading is the inside bar. This inside bar is somehow like the opposite of the engulfing bar, in the sense that the candle formed is within the purview of the previous candle, in the sense that the high of the candle is low compared to the high of the previous candle. Also, the low is higher than the low of the previous candle. You can see the candle is within this candle. So in this case, this candle becomes what we call the mother candle, while this is the inside bar. This is the inside bar, this is the mother candle. So this is the candle that we are going to be making use of to trade, while we are going to be making use of the mother candle to place our stop loss. Now, let us go to our real chart and let me demonstrate how to spot this price action pattern, this candlestick pattern, effectively and efficiently. Now, let me show you examples of the various candlestick pattern that I discussed. Now, the various candlestick pattern, like I told you, we are going to make use of are the pin bar, the engulfing bar and the inside bar. Now let us start with the pin bar. Now if you look at this chart very well, like I told you earlier, in the case of a pin bar, the body of the candle is small compared to the handle, or compared to the thread, or compared to the high and close. Now if you look at this candle very well, this chart very well, this is a pin bar. You can see the body is small compared to the thread, so this is classified as a pin bar. We only want to be trading this pin bar in the direction of the trend. If we see a pin bar that is against the direction of the trend and not occurring at swing points, we will not want to be taking note of such pin bar. We only trade pin bar in the direction of the trend and also at reversal points. This is also a pin bar that happens at an area of support, at an area of resistance. Sorry to say. You can see that the body is small compared to the thread, so this is classified as a pin bar. So I'm just giving you an example of a pin bar. These are not trade. I'm not showing you trades. Now this is also a bullish pin bar. Take note that the body is at the top of the pin bar, while this is the thread. This is the thread. Now whenever you want to look at the pin bar, whether it is bullish or whether it is bearish, you look at the position of the body of the candle. Now if you look at this, let me enlarge this chart very well so that you can see properly. Now if you look at this pin bar, you can see that the body of this pin bar is at the top compared to the distance of the thread. So this is classified as what? A bullish pin bar. You can see that it's at the top. If this body is at the bottom, it is classified as a bearish pin bar. Another example of a bullish pin bar is something like this. You can see something like this. This is a bullish pin bar. You can see that the hammer, that is the body is at the top of the pin bar compared to the thread. So this is classified as a bullish pin bar. Now this is another example of a bearish pin bar. Let me show you an example of a bearish pin bar. This is a bearish pin bar. You can see that the body of the candle is at the base, is at the bottom, is at the top bottom of the candle. So this is classified as a bearish pin bar. Now this is a bearish pin bar. You can see that the body is at the bottom compared to the thread. So this is a bearish pin bar. Now whenever you spot this pin bar in the strategy that I'm going to be explaining to you, just get ready to make profits from the forex market, because they are very, very, very powerful. If you can choose to trade pin bar alone, all well and good. I will encourage you to do that if you can master the discipline to do that. But if you want to earn more, if you also want to be taking other setups as well, it is also very, very ideal. Now another setup that we are going to be discussing about is the engulfing bar. Now like I told you earlier, in the engulfing bar, the high of the candle is higher than the previous high, while the low is lower than the previous candle's low. Now let me show you a classic example of an engulfing bar. Now this is the Australia USD 4-hour time frame. Now this is an engulfing bar here. You can see it is formed by the combination of two candlesticks. If you look at it here now, you can see the high of this candle is higher than the high of this candle, while the low is lower than the low of this candle. This is what we call an engulfing bar. This is another example of an engulfing bar. This is a bearish engulfing bar. You can see the candle is bearish. You can see the body of the candle is bearish, is red, so it is called a bearish engulfing bar. The same thing goes to this one. It is a bearish engulfing bar. You can see that the candle, the high of this candle is completely higher than the high of this candle, while the low is completely lower than this candle. Then another example is this again. This is a bearish engulfing bar. You can see the high of this candle is higher than the high of this candle, while the low is slightly or equal to the low of this candle. So this is classified as an engulfing bar. Some traders call this a railway track, and is a very, very nice trade setup that you can always take advantage of to make money from the forex market. Now this is a bullish engulfing bar. The high of this candle is higher than the high is higher than the high of this candle, while the low is lower than the low of this candle. So this is a bullish engulfing bar. This is a bearish engulfing bar. This bearish engulfing bar, some traders also call it a railway track. Now this is a very nice candlestick pattern that you can take note of. Now this is another example of a bearish engulfing bar. You can see the high is higher than the high of this candle, while the low is lower than the low of this candle. So these are various examples of engulfing patterns. Now whenever you spot this engulfing pattern in the direction of the trend, then get ready to make money from the forex market. Now another pattern that we discussed about is the inside bar. The inside bar is the opposite of the engulfing pattern, in the sense that the current candle, for example, let's say this is the current candle, is the low of the candle is higher than the low of the previous candle, while the high is lower than the high of the previous candle. So this is classified as an inside bar because the bar is within the purview of the previous candle. Now take note of it now. This is an inside bar here, a bullish inside bar. You can see that the candle is green, so it is the bullish inside bar because the close is higher than the open, and that is why it is called a bullish bar. So this is an inside bar, a bullish inside bar. You can see how price moved up as a reaction of this inside bar. Whenever you see such setup like this, just take note that traders are becoming tired of the bearish trend, and so they are getting ready to go into the market for a bullish move. And this inside bar often happens when price is trying to pull back to go into to continue the trend. Now this is an outside bar here, an engulfing bar. Sorry to say, this is an engulfing bar. This is an engulfing bar. Now, so if you scan through your chart, you will see numerous examples of this inside bar, pin bar, and engulfing bar. And I want to encourage you to do that. If you've not done that, to take time to go through your chart and study this concept as I explain it here. Now this is another example of an inside bar here. You can see it here. The high of the candle is lower than the high of the previous candle, while the low is higher compared to the previous low. So this is called an inside bar. You can see this candle is within the purview of this inside bar. So this is bearish because, as you can see, the candle is red because the open is higher than the close, and so it is called an inside bar. So this price action setup has scattered everywhere. So I want to if you've not been trading candlestick pattern, I want to encourage you to give it a try and to go through your chart and see how effective this candlestick pattern is. Now I'll be in the next video, I'll be discussing how to combine trend lines and candlestick pattern to find a price action setup that we can exploit to earn massive pips from the forex market. I hope you enjoyed this part of this course, and I want you to stay tuned and get ready for the next video. Have a nice time.